Good evening, everybody. Hope everybody's having a fun winter evening. All right. Tonight we've got the pleasure of having Chris Berhay with us tonight. Chris's background is that he's written over 100 weekly columns for optionsinvestor.com. He's conducted seminars and workshops for Invest Tools and is a frequent speaker at the investor conferences and money shows on business advisors and on the business advisory board for the Northwest Nazarene University. He's also been a consultant for a European investment bank where he has taught technical analysis to their fund managers, advised their proprietary trade desk, and helped trade over $2 billion. So he's got some unique perspectives of how to use option trading profitably. So without any further delay, Chris, welcome to the Candlestick Forum. We're anxious to see what information you've got for us.
Stephen, thank you for having me, and I'd like to thank everybody for showing up tonight. I promise you this will be worth your time. So, with your permission, Steve, I'm just going to get into it.
Go right ahead. We're anxiously waiting.
All right. So I've titled tonight's presentation "Trading Weekly Options Using Math to Generate Fantastic Short-Term Trading Profits." And fantastic might not even be a fantastic enough word. Anyway, having said that, we got to start with a disclaimer. The disclaimer: all securities used in this presentation are for educational purposes and are not to be construed as a recommendation to buy, sell, trade any of these securities. Now, as Steve mentioned, I help a bank over in Europe trade $2 billion. That's billion with a B. And it was rather, I learned an awful lot from them. And one of the things, the most important thing I learned from them was the rejection system, right? We start with a large universe of opportunities and whittle the list down and focused on a few. And I took all my, experiences and I put them together and I built what I call the Pulse system. Now, Pulse is an acrostic. And if you're not familiar, an acrostic is an anagram, or actually an acronym. There we go, acronym on steroids, because it spells something, right? Pulse. The P stands for profit potential, U, upside reward, L is low risk, S is setups and strategies, E are events, entries, and exits. And my Pulse system, is a series of videos that I've filmed and put on DVDs. I have a weekly newsletter that comes out every weekend. I have a watch list of stock that have good math. And then I pick 5 plus or minus stocks that I highlight each and every week. I review the picks from the previous week and understand the emperor has no clothes. If I'm wrong, I can't hide from it, and I can't push it way off into the future, because when I pick a weekly option a week in advance, we're going to know a week later how I do. And then I educate. And again, the Pulse system, an acrostic, P is profit potential. Now, this particular slide, this is from July of last year. This is about as good as it gets. Here's a MasterCard option. Now, understand, MasterCard has done a 10-for-1 split recently, and so the numbers might not line up, but at the time, this was a real trade. I had a student that hit this trade. He left a little bit of money on the table, but as you can see, it opened for 2 cents, and it closed at $1.40, but before closing, it reached a high of $10.10. So basically a 50,000% intraday move. That's the potential. Now, I don't want you to think I'm promising you 50,000% moves. I'm telling you that they're out there. This was actually, again, a stock that one of my students hit on this option. He left a little bit of money on the table. So while that's the potential, this might be more typical trade. This is FCX. This is Freeport-McMoRan. This is an option that in November of last year, it closed at 4 cents on one day. It opened the very next day at 4 cents, and it moved to 35 cents. Now, this is a stock that I had a student. He ended up buying it at 4 cents, and he sold it at 32 cents. Right? So, and that's quick mathematics. That's like 800 times your money, and that's maybe a little bit more typical. Same, I think this was the same student. In January of this year, he bought some Tesla 155 call options, and these are weekly calls. And again, obviously, if you follow the market, you will have seen that Tesla is much higher than this now, but we're looking for short-term moves. We get in and get out. He bought 20 contracts at 60 cents each, total of $1,200, sold them for $7.30. He made $13,400 gain on his $1,200 investment. And I ask, is that more typical? Let me share an email that I personally find enjoyable. And this is from another student still. He wrote, just a note to thank you for your insights to trading weekly options. I'm new to your techniques, but I've been trading options since 2005 with net losses. I sloppy applied your techniques to 2 trades this month, and both were winners. On January 6th, I bought a single straddle on Micron, then at $20.85, for 89 cents for the call and $1.07 for the put, for a total of $1.96. On the 8th, I closed them for $3.11 on the call and a penny on the put, $3.12 with Micron at $23.20 for a 49% return on investment after commissions. Now again, this isn't 50,000%, and this isn't even 800%. This is 49%. But what I like about this email was here's a trader that had been trading for 9 years almost with net losses, and he stuck with it. He became my student, and I taught him a system, right? And he applied the system, and he made 49% on a trade. Now, the same email, he continued that on the 22nd, he bought 4 Yahoo $40 put contracts at 40 cents with Yahoo at 40.08, and he closed them at $1.64. Yahoo had dropped $1.60, and he made 277% return after commissions. Right, so he's off to a good start in 2014. This email was from last month. Now, I did not have Micron on my newsletter that week. I did not have Yahoo on my newsletter that week. He was able to take the system that he learned, applied it to 2 stocks on his own, and he's making money. So I love that students do that. I also love taking credit for spoon-feeding trades. So here's what I consider maybe a more typical email. This student said, great call on your updates about Chipotle Mexican Grill and FAS. Right, for those unaware, FAS is the banking stock 3 times bull tracking stock. Right, so at 9:35 Eastern, he writes he bought 10 of the Chipotle January week 4 500 puts for $1.95, which after his commissions he paid $1,965.35, and 10 of the FAS January week 4 85 puts for 35 cents, which after his commissions cost him $365.35. And he says, as the attached screenshot shows, I closed out both for a net one-day gain of $6,538.44. So here's his attached email, and what I want you to look on this, if you can see it, and hopefully it's maybe not too small a font for you, he entered these trades about 5 minutes after the open on January 24th this year. He closed them with less than 5 minutes to go the same day, and he made $6,500 and change, right? And he had invested or had at risk or tied up, whatever you want to call it, somewhere around $2,300. So he made almost 3 times what he put into the trade. This is what we look for, right? We look to have upside reward. I don't even like to talk about a trade unless it makes a minimum of 100%, right? And having said that, this is one of the reasons I showed you the Micron trade. The guy made 49%. I love that trade because, here's a guy that's losing money for years and years. He sticks with it. He learns our system, and now he's off to a good start. We look to make lots of money. We try and make lots of money while risking only a very little bit. Now, the pulse system, the acrostic PUL, is how we get our watch list, right? Profit potential, upside reward, and low risk. We have a system based on the math. We look at the weekly options, and we reject. We bring this big, long list of stocks, and we make it shorter and shorter. And I have no secrets. I'll tell you exactly how I do it. I'm not going to tell you right here, right now, but I'm more than happy to tell each and every one of you how we pick our stocks. There's nothing black box here. This is, we let everybody know. I want you to know, I find it fun to play and do research and look at stocks and find setups. To me, it's like playing the game Clue, right? Colonel Mustard did it in the living room with a knife. How can we come up to that? We look at all these possibilities and we remove the possibilities that don't work, and we're left with the stocks that we want to trade. We then look to try and find a setup on the stocks that have good math. And our setups will either be stock specific, right, or market wide. Now, market wide might be because of a Federal Open Market Committee meeting, right, a Federal Reserve meeting. It might be because of a non-farm payroll. Now, stock specific might be because of a stock that's releasing earnings. Now, I need you to know we do not buy options before earnings hoping that there's an earnings surprise. I think that's bad math. We've got a much better way of doing it. But what we do try and do is we try and find, stocks that should move more than the options are pricing them to move. And then we put on one of 2 strategies. We either trade it directionally with a straight call, directionally with a straight put, or non-directionally, right? If you go back and you looked at that email about Micron, right, the email that I enjoyed so much, he bought both the call and the put, right? That's called a straddle. That's a non-directional trade, right? And Micron moved. We didn't know which way it was going to, he didn't know which way it was going to move. Again, I didn't suggest that stock, but we can find days that stocks should move more than others, and if we know what direction they should move, we've got a statistical advantage and we can trade it with straight calls or puts. But if we don't know which way it is expected to move, we will trade it non-directional. Now, Pulse, P-U-L-S-E, E stands for events, again, stock specific or market wide, and it also stands for entry, right? Do we get in at a certain time at a certain price? And I showed you that one email where the student lists his time. He got in just after the open, and he got in just before the close. Quite often, many of the setups we look for are as simple to time as buying either going into one day's close or coming out of one day's open, right? Or we have an entry base. We want the stock to be at a specific price. If the stock reaches this price, in the next day or so, we will enter our options. Now, the exits are a little bit more fine-tuned. We can use good till cancel limit orders, right, as a target, right? If you're happy with a certain amount, you put a limit order there and let the market work. Or another way we do it is we like to trail a stop loss order underneath. And our goal is pretty simple. We're just trying to make money. And to us, we make money. We buy low, we sell high. My whole system is in buying cheap, inexpensive options that the potential is far greater than the risk. Right? I'm not selling credit spreads. I'm not doing calendar spreads. I'm not, putting on condors or anything. I'm basically buying cheap options that fit our criteria. Now understand, I do this because of the great mathematical advantage we have. Stocks, they're one-dimensional. Price. You buy a stock, it goes up in price, you make money. You buy a stock, it goes down in price, you lose money. Right? With the possible exception of collecting a dividend, there's no other reason to buy a stock than for price appreciation. Now, I know some people can make the argument about shorting stocks, but, I don't want to short Tesla. Right? I don't want to short Google. I don't want to short Twitter or Facebook. Who knows how high these stocks can go? Right? But options, on the other hand, are multidimensional. Options take into consideration the amount of time before expiration. Options, you can trade a call to profit if the stock goes up. You can buy a put, the profit if the stock goes down. Right? We can buy certain situations. Well, we'll buy an option where the volatility is low, and we don't even need the stock to move. We just need the volatility to change. There's a number of reasons to trade options, and it's all based on math. And besides the math, the number one reason for me to consider trading options, or asking you to consider trading options, there's two questions. It's how much could you lose, and how much do you use? When we're using 4, 5, 6 cents to buy an option, we're talking $4, $5, $6. A small little guy, right, can risk $20, $30, $40. That if they're wrong, well, geez, they just they brown bag it to lunch that week. Their life doesn't change. But if they're right, life does change. So it's how much could you lose and how much do you use? To me, that's the reason to trade options. The other way of looking at it is that options are a leveraged directional play. Right? Options have a lot of leverage to them. You can buy a call option, which gives you the right to buy a stock for a set price, for a set period of time, without the obligation to buy the stock. Right? And when you think about it, a call option is simply a bet the stock is going up in price. A put option gives you the right to sell a stock at a set price for a set period of time without the obligation to do it. So you could say that a put option is a bet the stock is going down in price. And we look for situations, right, a setup, whether it's stock specific or market wide, we look for opportunities where we feel the stock's going to move more than the options are pricing. And if we know which way, or if we feel which way it's going to go, we can trade it with a straight call or a straight put. If we're not sure, we'll do a straddle, which is a call and put, the same expiration and the same strike prices. Or, right? It's a non-directional bet the stock will move. It's not saying it will move one direction or another, it will move. Right? We can also do a strangle, which is a call and put with the same expiration but different strike prices. And it too is a non-directional bet. A stock will move, but it's maybe that'll move even bigger. Understand that strangles don't work as often as straddles, but when they do work, they work for a bigger and bigger gain. Right? So here's an example from my November newsletter last year. Right? I wrote, if Tesla gaps up, this is in regards to its earnings, right? We were going to trade it after the earnings, not before. I said, if Tesla gaps up, I feel the reversal has a higher likelihood of being the better trade. If Tesla gaps down, I feel the continuation has the better chance. Both involve buying puts, right? And as always, you can hedge yourself by trading strangles, both buying the call and the put. Basically what I was saying, right? If Tesla doesn't gap, we don't trade it, right? Because if there's not enough shock to the market to gap it, there's not going to be enough shock to move it. But if it gaps either up or down, the market was caught off. And when the market gets caught off, it's not going to flatline from there. And so I gave in my newsletter my opinion that no matter which way it moved at the earnings announcement, that the move afterwards was down and to buy puts. And if you either didn't believe me or didn't believe in yourself or wanted to take less risk, buy a strangle. So here's an email that I got just later that week. It said Thursday at 9:39, I bought 5 143 puts on Tesla at 42 cents. I then placed an order to sell at $1.50 and left. My order was filled 2 minutes later, according to my computer. You suggested puts no matter where it opened, and it worked. All right, real quick for fun, when you buy at 42 cents and you sell at $1.50, that's a little bit more than tripling your money, right? That's a little bit more than 300%. You got filled in 2 minutes. Anybody care to annualize that return to figure out what that is on an annual basis? All right, well, I'm having a little bit of fun. Anyway, testimony I received on the 8th. Right, as a newer student of 3 or 4 months, I had a great week trading your system. Here are my results. Bought one Tesla November 149 put for $1.38 and sold it for $6. Now, I don't change the formatting on my emails. You know, if I did, I might make 6.0, $6. Bottom line, one contract cost him $138. He brought in $600. He made $400 and $462 before commissions. The other gentleman that bought 5 options at 42 cents, he put in $210 and he pulled out $750. So it doesn't require a huge amount of money, right? This was a stock-specific setup, and this was a directional trade. Now, an important point I want to share, we have a thing called sloppy slop. Any system that you're considering using that requires you to trade it perfectly is doomed to fail because you won't be able to trade it perfectly. Right? We look for massive moves and try and catch a piece of that massive move. And if we leave money on the table, if we're sloppy, right, either sloppy on our entry or sloppy on our exit, we're okay. Right? The one student said he bought 5 of the 143 puts on Tesla for 42 cents and sold them at $1.50 2 minutes later. Right? That option went to $10 the next day. 2 days later. Right? He bought them at 42 cents. They went to $10. He sold them at $1.50. He was thrilled to triple his money. He left money on the table. Again, when I showed you that first slide of MasterCard saying there was 50,000% worth of potential, I mean, you do the math here from 42 cents to $10. That's fairly big math too. You know, we have setups that have so much potential that we don't have to capture all of the potential. And the fact is, in my opinion, right, the longer you become a student, the less slop you have in your trade. Right? And the bottom line, you know, we trade Tesla a fair amount, or we talk about trading Tesla a fair amount. We tend to trade Tesla on Friday mornings, right? Because we will price out what the options are priced in a move, and we will look for an inexpensive option that if we're wrong, we'll lose a little bit of money, but if we're right, we'll make a ton of money. This particular pick was when I said, hey, I don't care if it goes up, I don't care if it goes down, buy puts, and I went into great details on why, and it worked. But again, I remind everybody, when you're not sure, you can buy both the call and the put. Our system, the Pulse system, right, I filmed a number of different videos. I've lost track of how many videos there are, how many lessons, and how many DVDs that is. But we put out a weekly newsletter. In the newsletter, we have a watch list. And then I try and pick the 5 best setups for that week, and we review the previous week. And all along, we're trying to educate. And my process for educating, I like to give what I call a trip. A trip is a combination between a trick and a tip. Right? A trick and a tip, and I tend to slur them together and say trip. Everybody, I got a trip for you, or a trick for you, and they end up being trips. And my goal in all of this is to teach you how to exploit a setup. If you realize that these setups repeat over and over again, and we try and show you the setups in real life. You know, most all of the setups we talk about are before the fact. Occasionally, I'll see one that I missed beforehand, and I'll get into it in details and say, okay, this is, you know, I'm embarrassed here. I missed this, right? Here's a setup. Next time you see it, this is how you trade it, right? And so, as an example, Schlumberger, ticker SLB. Now, I jokingly call myself a slob trader, and slob was one of the stocks in this week's newsletter, and I will point it out to you, you know, but this is from January. This is from last month. I have a whole video on trading slob. Here's an option that closed one day at 3 cents, opened the next day at 4 cents, traded up to 36 cents. That's a 900% move in one day. Now, not all the moves we look for are one-day moves, right? Here's an Apple. This is in June of last year. This chart shows you we had 4 days of entries under 50 cents with a low of 17 cents. We had multiple exit points at above $6, right? So we don't always get in on one day and get out the next. Sometimes we'll be in a trade for a few days. In July of last year, I mentioned that Apple had a setup, that I asked everybody to consider long-term options. At that point in time, Apple had incredibly low implied volatility, and I said, hey, we want to buy longer-term options. Now, we don't necessarily need to keep them for the long term. We just want to buy them long-term options. And I gave exact parameters on what to buy, right? And basically, the short version here is I said buy the premium that's under $3. And it didn't really matter to me if you were looking at a 1 month option, a 2 month option, a 3 month option. I didn't care if you bought a leap. Just buy the option that the premium's underneath $3. And I shared a bunch of the math why $3 is our magic number. And you can see, here's an option that was 81 days before it expired. It was $60 out of the money, and it moved from $2.70 to $4 in a day. The November option had 109 days to expiration, and it moved from $3 to $4, right? It was $80 out of the money. Now, those same option, if you would have held on to it longer, it went from $3 to $25. So sometimes we get trades that are long-term, but as a general rule, we're in and out, right? In the newsletter last month, I picked 5 stocks, right? My top 5 plus or minus, I picked 4 stocks. My top 5 plus or minus had 4 stocks: FAS, Chipotle Mexican Grill, VXX, and Yahoo. Right? And here are screenshots of VXX from that week, and I don't know how well you can see this or not. It might be a little bit too small a font, but the 43.5 call opened at 14 cents. It traded to $2.20. That's almost 16 times in price in one day. The 44 call opened at a dime and traded to $1.47. That's over 14 times in price in one day. The 44.5 call opened at 6 cents, traded to $1.17. That's 19 times in price. And the 45 call opened at 4 cents and traded to 75. Again, almost 19 times in price. And so I think there's an advantage of being told, right, that, hey, we've got this stock, we've got this setup, look for it. And so my newsletter this last week, right, the newsletter that came out last Saturday, again, I had 4 stocks in my top 5 plus or minus: BlackBerry, eBay, Schlumberger, and Tesoro. BBRY, EBAY, which I'm going to say eBay, Schlumberger, SLB, which I jokingly call slob, and then Tesoro, TSO. So here's a screenshot in the left from Schlumberger. The 92 call opened Monday morning at 22 cents. It hit a high of $1.83. That's over 700% move on a Monday without the leverage at the end of the week. Now, why did I pick this stock? Right? I picked this stock because it was what we call our lit fuse indicator. We have simply put a Bollinger Band on it, and we counted that it had been inside its Bollinger Band for more than 19 days. And with a 2 standard deviation setup on the close with a 20-period look back on the Bollinger Band, that indicator tells us that the stock should break out. Now, we don't know if it's going to break out to the downside. We don't know whether it's going to break out to the upside, but we can put a straddle or strangle on. Our rules have us buying the call and put at roughly the same premium. So if you bought this call for 22 cents, you should have bought a matching put at roughly 22 cents. All right, 44 cents for the pair. Let's call it 50 cents. If you pay 50 cents and you can sell one side at $1.83, you've made 300% your money in a day on a setup that's got very little risk. Right? This BlackBerry, it closed Monday at a nickel. It opened Tuesday at a dime. It rallied up to 29 cents. Right? So that's 3 times your money. eBay. Right? On Monday, the 57 call opened at 9 cents. It went to a high of 55 cents. That's more than 600%. It hit $2 today. Right? If you buy the call for 9 cents and you buy the put for 9 cents, you got 18 cents in it. Let's call 20 cents. If you lose money on the put, what does it matter? It doesn't matter. Right? If you paid 20 cents for the pair and you sell one for $2 and the other expires worthless, you made 1,000% return on your money. This setup was the same setup. We look for stock specific. We look for market wide. We didn't pick eBay because of a market wide event. We picked eBay because there was a stock specific setup that told us that the options were underpriced. I couldn't tell you whether to buy the call. I couldn't tell you whether to buy the put. Albeit, if you read my newsletter, I basically told you to buy the call for a number of reasons. But if you weren't sure, buy the pair. It doesn't matter, right? When you get such a big move, you can lose 100% on one side and still make 1,000% on your money. Right? So here's to me the loser of this week's newsletter, right? If you traded every stock in this week's newsletter, this is Tesoro. The 51.5 call opened on Monday at 35 cents. On Tuesday, it was 40 cents there's about, right? 50 cents. Well, on Wednesday, it hit $1.32. So if you buy the call for 35 cents and you buy the put for 35 cents and you pay 70 cents for the pair and you can get $1.32 for the pair, you're 8 cents away from doubling your money, right? I'm going to call that a failure, right? Having said that, I don't know that it's such a bad failure, right? You know, I always get people that say, you know, they become a little bit cynical. Hey, I'll out trade you, right? My student will out trade you because we know when to buy options and when not to buy them. Because when a stock doesn't move, that option's a bad deal. And when the stock does move, you don't have to trade it perfectly. You can trade sloppy slop and you can make money. My students make money, right? Steve, I want to thank you for bringing me on here. We're offering a subscription to my newsletter to get all the videos, right, all the DVDs. You know, again, you get, I don't know, I think there's 6 DVDs. I should know that. I don't. I apologize. I write a newsletter every week. If it means anything, I'm actually a professional writer. I was published the first time when I was 14 years old. I wrote a logic puzzle. I sold to Dell Crosswords. I've written hundreds and hundreds of articles. I've written travel articles. I mean, I know how to write. I think people will enjoy my newsletter. We have a watch list of the stocks that have the best math, and then we pick 5 plus or minus that have identifiable setups, and we review the previous week, and then we try and educate. Anyways, Steve, if you want to open the floor to questions or anything. All right, so I see a question here. Someone asked me if I'm buying in the money or out of the money options. I tend to buy the out of the money options, right? I buy the out of the money options because they're cheaper. Now, as far as which specific out of the money option I buy, the math tells me how far the stock should move, right? And then the options will be priced, and there is a sweet spot. And, you know, the rule of thumb is that there's more math than just a rule of thumb. It's part of the system. You know, here's the bottom line. My system works. We give a full 90-day guarantee if you feel for whatever reason I've under-delivered, right? Because I want to overpromise and under-deliver. Or, excuse me, I want to under-promise and over-deliver. If you feel I've got it backwards, right, where I overpromised and under-delivered, we just give you your money back. I got to tell you, I've got amongst the highest renewal rate of all newsletter writers in the industry, and my students make money. All right, so I get some questions going here. Let me try and slow them down. Someone said, Bollinger Bands with 2 standard deviation is what you use to pick your underlines. It's one test I put on them, right? It's not all stocks will be set up with a Bollinger Band, but when they are, we talk about them. Someone asked, what trading platforms do your students prefer? You know, I've got students that use them, all the different ones. This is going to sound amazing to some people. If you really understand our system, you'll know that you don't even have to read a chart. We can pick a stock based on the price of the stock and its options, and we time our entries when it reaches certain prices. It doesn't matter on the charts. William, let me just give you a simple yes answer to your question, if that's okay. It says, what is the criteria you use for your stock screener? The Pulse system, first of all, you know, we're looking for short-term options. And 12 weeks of the year, there are 12 weeks of the year, you know, there's 3,000 stocks that have expiration that week. The other 40 weeks, we start with the weekly options. We try and remove the stock that the bid-ask spreads are too wide where there's no liquidity. And then we start to look for stocks whose options, you know, predict a certain move, and we have a formula to predict a certain move. And if we feel the stock will move more than the options are predicting, then we look at those. I had someone here say they've never considered an out-of-the-money option before and stayed away from it. The reality of it is you can lose money using trading out-of-the-money options, but you can lose pennies doing it. But when you're right, you can make dollars, and we're right more often than we're wrong. Now, do I need a monitor to place trades, or can it be set up overnight? Again, I think when you say a monitor, I think you need a brokerage account with the broker. I look to set up most of my trades going into the close of one day or coming out of the open at the other day. Other than that, I calculate my prices ahead of time, and I put in a good till cancel order, and literally you don't have to watch it to get it. Someone said, how about beginners? Can we do okay? Absolutely. You know, my thought is, the beauty of this is you can paper trade, and you don't have to wait weeks, months, or years to see if you're making good decisions. You'll recognize fairly shortly whether the decisions you're making are working or not. The other nice thing about beginners is it doesn't take very much money, right? We literally can find trades that are $2 or $3. Do The question asks, you provide actual trades with details? Absolutely. That's what the top 5 plus or minus is. We go into great details. Again, these 4 examples I used on eBay, Schlumberger, Blackberry, and Tesoro, we had details on those. Someone asks, is it $97 for a 3-month subscription? How long does it take to go through the DVDs? And is it necessary? Can we simply follow the trades in your newsletter? I put a lot of effort into the DVDs. I find the students that are most successful are the students that watch the DVDs more than once. And I think you'll enjoy them. I had a lot of fun making them. So Steve, someone has sent something about the link. You should be able to, make this a clickable link. If not, you can copy this. This is https://tradewinspublish.infosoft.com/go/Verhey MFNLN/Bigelow/ At least I think it might have been backslashes. Forgive me. And I think my system's really good for people that have not done options. Part of the videos, I go into the math on how options work. Again, I've been trading for 35 years. I've been writing about trading for most of that time. Like I said, I've written hundreds of articles. I was hired by a bank in Europe to teach their fund managers how to time the entries and exits using options, and so I feel I know an awful lot of them. So if you've never traded an option, I think I'm a good person to learn. Someone says, do you usually pick far out of the money? No, I generally just slightly out of the money. Person asked, it says 97 for 3 months or 97 per month. No, it's 97 for 3 months. And then we ask you to renew at $97 for 3 months. And again, I mentioned that I have amongst the highest renewal rates of any newsletter writer in the industry. Someone asked, I mentioned Goldman Sachs or GDX. Why these? I have a 4-year history of trading Goldman Sachs options successfully. My students have a history along with me of trading it. GDX is gold miners. I started at a private mint. Actually, I started before that, but my background is in trading the precious metals. Someone asked, is the formula in the course? Absolutely. All the math is in the course. We don't hide any of our math. Someone said, what's the success rate? Out of the money options are usually 90% losers. And first of all, I'm going to disagree with your math. But having said that, our success rate is incredibly high. Hold on one second. Someone asked, do I ever do live classes for my students? Yes, occasionally. Someone asked, is there a replay of the webinar? I can't answer that. Marvin, thank you for that. So a couple people asking, what are the winning percentage out of 10 trades? How many are winners? Let me share something with you. But before I share my results, right? What if I was right only 1 out of 10 times, right? What if I was right 1 out of 10 times and 9 of them lost 100%, and the one that made it made 1,000% or 2,000%? The net result is a positive amount. So having said that, I would say that our winning percentage is far greater than 50%. Right? Again, you can look at the newsletters, and it's really not what I do that matters. I got to share something with you. My trading in January suffered. My father-in-law died unexpectedly, and I lost on a couple of Chevron trades that I had a profitable position on, and then the bottom fell out from underneath me. But you know what? I came back and hit VXX for gains. I came back and hit GDX for gains. I came back and I hit all these stocks for gains. It's the nice thing about this system when you really learn it is that you can turn it off at any point in time and turn it back on. There's a lot of questions here. So the question is your letter enough for a beginner to start? My letter with the DVDs, absolutely. I have countless students that have never traded options before. There are brokers out there. I have a relationship with a broker that, if you've never traded an option before, I can send you to him. He's probably going to charge you an extra $5 for commissions. And I tell people, don't worry about an extra $5 here or there. If you've never traded, you need somebody to, hold your hand or somebody to give you permission where other people won't. You got to pay a little bit more to get in, but these can be traded online. We only work on stuff that has liquidity. So a couple people are having problems with the link. I think Becky has fixed that. Again, I'm trying to scroll through these things. Someone asked, how much time do you buy in your options? Now, this will sound crazy. We do an awful lot of trading on expiration Friday. We look to get in, and quite often we're out within a half an hour. Right? We have a trade we call the Friday trade that we've got tremendous success. Someone asked, what is the price after the first 3 months? There is no change to the price. The special buying now, we give you all the DVDs. We normally charge $195 for the DVDs and then $97 for the newsletter. We're giving you the DVDs for free. And, again, we've got a full money-back guarantee. If you're not satisfied in 90 days for whatever reason, you're allowed to get it. You can cancel and get your money back. Now, guy asked a question, are you teaching us how to find these setups ourselves or more an extended overview of what you do? That's one of the reasons I wanted to show that slide of the email that I liked earlier where the gentleman traded Micron and Yahoo, stocks that were not in my list that week, but he was able to learn the system so that he was able to do them on themselves. Again, it's $97 for 3 months. Can a beginner open and fund an account with $1,000 if there are cheap options to trade? Absolutely. Okay, a lot of people ask about the link. The link's now working. Again, and I don't know when to stop answering these things, but you're asking, so I'm going to try and answer as best I can. I think one of the beauties of the system is we look back at what we just looked at. Again, I make predictions ahead of time. The emperor has no clothes. If I'm wrong, I can't hide from it, right? But if I'm wrong, I've been doing this long enough that I can tell you why I was wrong so that you shouldn't be wrong in the future. Again, we teach. Simple as that. Our newsletter comes out late on Saturdays. So when I asked am I active on commodity options, that's my background was commodities. Someone asked, do I work with InvestTools? I was actually the very first options trainer that InvestTools hired. It's been so long, back in the 90s. Some people are asking if there's a webinar replay. I'm assuming there is. Becky, that's more of a question you can ask. All right, so I got a guy that just said, and I don't know that I've met you or talked to you, but I thank you for saying it. He said, this is about the best newsletter deal you ever get and entertaining to boot. I like to have fun, right? As an example, I chose BlackBerry this past weekend, and I likened it to the city of Pittsburgh. And when I write the review, I'm going to talk how it ties in. I think my students learn, and I asked the question, will you disclose to students how to search for stocks? Absolutely. Do you recommend an options broker? Yeah, generally no. I'll tell you who I use. I'll tell you who my assistant uses, but I don't want to upset someone that I don't use. Someone says, isn't it required to have a $25,000 account if one trades options frequently? That's actually for the day trader regulations. And if you trade too much, you would need that, but you shouldn't need that much in your account. Bottom line, I like to get students with a much smaller account so their account grows to $25,000, that it's never an issue. Someone asks, is this the price for your course or the newsletter? Again, the course is normally $195. The videos, we're given to you that for free to sign up for a $97 quarterly subscription. We don't raise the price afterwards. Again, if you don't like it within any point in time, just send it back. And a couple people are my students already, and I do try and entertain. So, I guess here's my bottom line. It's not going to cost you anything to watch my videos other than your time and to tie up your $97 for a little bit. If you don't like it, we can part friends, but my students make money and my students learn how to trade. So someone said, is a weekly option secure that comes out, say, on a Thursday and expires in 7 days? A weekly option is an option that expires every Friday. Some stocks have weekly options that are out for 5 weeks or longer. Quite often they come out on a Thursday and expire 8 days later. Someone asks, is there additional support email? Yes, I've got a staff that helps with email. I'm probably a little bit behind on these things. They're maybe coming in faster. Person asks, are the DVDs downloadable or they're mailed? We mail you an actual physical DVD. How many contracts do you buy? You know, I'll buy hundreds, you know, if it makes sense because they're particularly cheap. You know, someone asked what's my success ratio. I've traded VXX puts 45 straight times without a loss. I've got students that look for a specific setup on VXX and they make money on it. So is this $97 per quarter a temporary price? I'd like it to be a temporary price. I'd like them to raise the price, but if we do raise the price, everybody gets grandfathered in. So I asked, can you recommend a Canadian broker? You know, I've got I almost think TD Ameritrade's Canadian, aren't they? Silvario, I hope I defined weekly option for you. You saw that again, and I'm again clicking behind these things. If I don't click, they just run away from me and I can't read them. Someone says, had I used your straddle strategy on Apple today, I would have killed them, right? All right. Anyway, it's kind of nice to see some of my subscribers in there that know what I'm offering, you know, giving comments. You know, when someone's never traded my system, you know, I don't think their comments have any validity, you know, and obviously I'm trying to sell you something here, so I'm sort of biased, but I've got a lot of satisfied students, and I've been doing this a long time. So all right. So Steve, somebody come help me out here. Someone asked, what is VXX? VXX is a tracking stock for the VIX, volatility. Give me 1 second. They just got a question I need to type, or answer I need to type.
But Chris, are you here?
Yeah, I'm still with you. I'm sorry about that. I was reading it. I started to read those things without saying. They come in. You know what, Steve? I got to tell you something. You have a lot of people that show up to these things, and they take the time to to type questions, and I try and answer them as fast as I can. If I had them like live, they'd go past me faster than I can read. So I don't know if you hear my clicking in the background. I'm trying to answer them, and I'm running out of voice here.
You.
So
yeah, my system went dead here for a little bit. So, anyways.
Anyway, hey, Steve, here's the bottom line. We've known each other a while. I mean, I respect you. I wouldn't come on here if I didn't. I think you respect me. You wouldn't have me here if you didn't. I think we complement each other so well because part of my system, you don't even really need to know charts. And if someone can learn the candlesticks from a guy like you and they can learn to pick the right options from a guy like me, they should make a ton of money.
Okay,
all right, hey,
this
is Chris.
Yeah, go ahead, Chris.
Anyway, Steve, again, I want to thank you for having me on. I respect you. You respect me. My system, helps people pick the right options. Your candlestick helps them pick the right stocks. I mean, my students make money, and we've got to guarantee that you can't lose on this. I like to educate people. I remind everybody, when I started, we had a Western Union cable hardwired into our office, and I had a ticker tape machine. So I've been doing this a long time. People learn from me, and people earn with me. And Steve, I just want to thank you for the opportunity to present. And if there's anything I can do, just let me know. And everybody, thank you. God bless, and good night. And I'll let you take over and finish the formalities. Thank you again, Steve.
All right, that's about it, Chris. That was good info. I got knocked off here for a little bit, so I'm back. But everybody, look at this information. Chris has been around for a long time, and he's doing this, and he's successful at it. So that's where you want to get your information from. And Chris, thank you for the information tonight. It was a very good presentation. And with that, everybody, have a good evening. We will see you in the chat rooms. And I'm trying to stay out of the snow up here. So thanks, Chris. We'll talk to everybody in the morning.